Hey, how's it going? This is from newtrader.com, newtraderu.com, and I'm just going to read 10 Paul Tudor Jones price action trading quotes. Paul Tudor Jones is one of the greatest traders and money managers of his generation. He has no losing years in his primary fund for decades. He is able to more than double his capital under management during the Black Monday crash of 1987, while others faced huge drawdowns and account blow-ups. Drawdowns and blow-ups. He's ranked at 120th richest person on the Forbes 400 of wealth. So he's pretty rich, and his net worth is around 5 billion and growing. He's a guy that traders of all levels need to listen to what he has to say about trading. So this writer of this article was kind enough to compile 10 quotes by Paul Tudor Jones that we're just going to go over, and I would like to appreciate that. And you can come to this, go to this website for that, traderu.com. There is no training classroom or otherwise that can prepare for trading the last third of a move, whether it's the end of a bull market or the end of a bear market. Volatility expands at the end of one trend direction, at the beginning of another. What was working stops working, and the key to the lock changes for profitable trading. The most important rule is to play great defense, not great offense. Every day I assume every position I have is wrong. I know where my stop risk points are going to be. I do that so I can define my maximum drawdown. Hopefully, I spend the rest of the day enjoying positions that are going in my direction. If they're going against me, then I have a game plan for getting out. This is important. The most important rule is to play great defense. The other one, always be managing your risk. Be open to being wrong about price action. Have a stop loss point and know your drawdown risk. Let your winners run until they stop and then exit your position. I believe the very best money is made at the market turns. Everyone says you get killed trying to pick tops and bottoms, and you make all your money by playing the trend in the middle. Well, for 12 years, I have been missing the meat in the middle, but I have made a lot of money at tops and bottoms. The best risk-reward ratios are with buying the dip near the bottom and selling the short near the market top. Buy the dip near the bottom and sell the short near the top. So this is his best risk-reward ratio. Don't average losers. Decrease your trading volume when you are trading poorly. Increase your volume when you are trading well. Never trade in situations where you don't have control. For example, I don't risk significant amounts of money in front of key reports, since that is gambling, not trading. Don't buy more of a losing position. Trade smaller during losing streaks and trade bigger during a winning streak. Don't risk a lot of money on reports like earnings or the Fed meetings. That is gambling. I always believe that price move first and fundamentals come second. Interesting. He believes that the price moves first, fundamentals second. Wow. So he doesn't, like making 5 billion, he doesn't think about fundamentals. So if he actually said that and this is true, that's amazing. And I also believe the same thing. There's something quick about price. Price is, yeah, this is all about price action. Price is, yeah, price is powerful. You know, price moves different. It moves quicker, moves more precisely. I really agree with this. I actually believe this one right here is my favorite quote. I always believe that prices move first and fundamentals come second. Yes. So this is very important because I am a person who really appreciates fundamentals, and I also agree with this totally. Price action prices in fundamental price action prices in fundamentals in advance. The market is always projecting and calculating the future through price adjustment. Wow. So this is also adding on to what we just read. Price action prices in the fundamentals in advance. The market is always projecting and calculating the future through price adjustments. This is very true because sometimes you see a price set up like a double top or double bottom or a pennant, and something in the economy fundamentally happens that is actually a catalyst for that double top or bottom to start moving. So that is something that I think happens a lot. I spend my day trying to make myself as happy and as relaxed as I can be. If I have positions going against me, I get right out. If they're going for me, I keep them. I spend my day trying to make myself as happy and as relaxed as I can be. What a mindset. This is insane. Like, this is great for mindset for, yeah, I love this. I love this. I love this. I spend my day trying to make myself as happy and as relaxed as I can be. This is very helpful. And yes, this is quite spectacular. Going with the flow of price action by letting your winners run and cutting your losses short is a good psychological practice for a trader. Going with the flow of price action by letting your winners run and cutting your losses short is a good psychological practice for a trader. One more time. Going with the flow of price action by letting your winners run and cutting your losses short is a good psychological practice for a trader. Wow. Fundamentals might be good for the first third or first 50 or 60% of a move, but the last third of a great bull market is typically a blow off, whereas the mania runs wild and prices go parabolic. There is no training, classroom, or otherwise that can prepare for trading the last third of a move, whether it's the end of a bull market or the end of a bear market. A market trend can move far outside the boundary of what people think is possible and become completely removed from fundamental values. Very true. Bitcoin. When you get a range expansion, the market is sending you a very loud, clear signal that the market is getting ready to move in the direction of that expansion. When you get a range expansion, the market is sending you a very loud, clear signal. So when the range expands, the market is sending a very loud, clear signal that the market is getting ready to move in the direction of that expansion. Okay, that's good. So when the range expands and prices go back to the range, and this would mean this is a clear signal that the market is getting ready to move in the direction of that expansion. A breakout and increase in a trading range signals the next direction of a move. So price will break out and the range will expand, and price might linger at that price point for a while, but this shows you the direction of a move. The whole world is simply nothing more than a flow chart for capital. The whole world is simply nothing more than a flow chart for capital. Money flows in search of returns sometimes, and at other times in search of safety. So it's either safety or returns that creates liquidity in the markets. My metric for everything I look at is the 200-day moving average of closing prices. I've seen too many things go to zero, stocks and commodities. The whole trick in investing is, how do I keep from losing everything? If you use the 200-day moving average rule, then you get out. You play defense and you get out. The 200-day moving average of prices is a great defense tool to know when to get out of a position. So he uses this 200-day moving average. I actually like the 300. So that's good. But this moving average is very important. I've noticed. I use more than one. So yeah, you know, it's very important. It's also the last line of defense in an uptrend before the probabilities shift to a downtrend beginning. The concept of playing 100 and something times earnings for a company, for me, is just an anathema. Having said that, at the end of the day, your job is to buy what goes up and to sell what goes down. So really, who gives a damn about PEs? Price to earnings ratios are not great trend trading tools, but price action is. You always want to be with you always want to be with whether the predominant you always want to be with whatever the predominant trend is. Yes, you always want to be with whatever the predominant trend is. That's how he made billions. And finally, always trade in the direction of the primary trend in your market. Go with the path of least resistance. So here we've gone over all of the highlighted quotes by Paul Tudor Jones, and I hope that you were also energized by this and that you learned something from them. I really enjoyed this, and this is by Steve Burns. He's also written some books. I guess I'll link to some of them. And thank you so much for giving us this article, and thank you so much for taking the time to listen to this. So I'll see you very soon. All right.